have been proven to be profitable over a data set of 5,000 plus real trades, not backtest results. You may be thinking, how do I hire a trader without the risk of trader or money management abscondment, running away with your money? Traditionally, investors transfer a sum of money to the trader's personal account to allow the trader to trade for them. This setup is unregulated and non-transparent, and it's easy for the trader to run away. With our Forex Briefcase MAM multi-account manager setup, investors deposit their funds with a regulated brokerage that adheres to strict rules such that only the rightful owner of the account can withdraw from the account. This means that Forex Briefcase merely trades for you through a contractual agreement. Forex Briefcase does not have the rights to make any withdrawals. Now you can earn a passive income, having Forex Briefcase trade for you while you enjoy the flexibility and security of holding the funds under your own name. Contact us to find out more.
You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them out.
All right. Hello, everyone, and good morning, good evening, or good afternoon, wherever you're watching this in the world, and welcoming back all the usual members as well from the LCMS Traders Club, and a big welcome to people watching this on YouTube. You are watching the delayed telecast, and if you would like the live feed, we do offer memberships into the LCMS Traders Club. Make sure you visit the Jindal Thai website in the bottom of this video as well. So we've had a few things going on, and if you did trade last night, I saw there was a little bit going on as well, and I hope you did have a good session. And for people that are new, this is the currency call presented by Forex Trading Asia, and a quick introduction as well before we get into things. It is episode 438, and it's the 10th of December. And we analyze the currencies as follows. So on Monday, we do Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, we do the Pound. Thursday, yen and gold. And then on Fridays, we do CAD and cryptocurrency. And in the currency call, we endeavored to go through the key market economic updates. We explain what the data means, and we also preview events before they come up. And we go through any possible trade ideas. We also go through key support and resistance levels, and obviously much, much more. And this currency call will be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas, and we'll also highlight the potential targets and also risks. A disclaimer as well, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering into any trades. Now, to start things off, we do have Kim Hong here, currency strategist at LCMS Traders, just to give us a preview of the CPI data release coming out this evening in this time zone, GMT +8 at 21:30, and what it all means for potential trades and also what to look out for as well. So over to you now, Gimme.
All right, thank you, Scott. TGIF, everyone. Okay, the US inflation report will be released at 2130 GMT +8. It is the final report, okay, before the Fed's meeting next week, okay. And the reason why this important, the reason why this inflation report is important, okay, because it will have an impact to how the Fed will act, okay, either next week or in the near future, okay? So I think I'll just head straight over to the economic calendar to show you guys the forecast, all right? Okay, so as my screen is loading up, okay, I think it's loaded up already. Where is it? Here, over here. Okay, I will pay particular attention to this data over here. Okay, it's the headline CPI year-on-year data for the month of November. All right. So it is expected to be 6.8%. All right, measured in November. All right. I think Bloomberg has the figure as 6.7 or something, but either way, 6.7, 6.8 is a 40-year high level, okay, which is why I'm paying particular attention to this figure that will be released later on, all right? So it's forecasted to be 6.8. If this happens, then remember, the previous figure that was released in November, all right, actually hit a 30-year high level. Okay, so if this time around we are going to get something at 6.8 or 6.7, even 6.9, then we will be seeing a 40-year high inflation level. Okay, what this means is that prices are going up, prices are skyrocketing like nobody's business, and for sure the Fed is definitely in a very, very, very I would say difficult situation. Okay, if they were not to speed up their tapering. Okay, so prior to this, I think there's actually many speculations out there that and expectations, okay, that the Federal Reserve will be speeding up the tapering, QE tapering. All right, at the moment and for the month of December, it's actually the pace is actually 15 billion per month. Okay, $15 billion per month of tapering. We are all going to be expecting, something like a 20 or 25 or even a 30, okay, a $30 billion dollars per month of tapering starting from January onwards. Okay, if they were to do a 30 starting from January, then it would take them 3 months, okay, to clear off the massive 120 billion, because November and December will be 15 each. That will add up to 30, right? And then they have another 90 more to go. So for 3 months, they'll be able to be done with this whole tapering. Then after which they will, have more time to consider a rate hike. Although I personally feel that a consideration is pretty much not so required right now. I mean, we are having a potential 40-year high level of inflation, okay, ahead of us, right? So this data, okay, there will be released data tonight, will be important. Hence, we can expect price movements, okay? If let's say the data were to fall short, okay, instead of like say maybe like a 6.7, 6.8, we are seeing a 6 or maybe a 5, okay, then you may actually question, the market may actually question whether it will put the whole increase in speed, increase in pace of the tapering by the Fed on hold. Okay, where the Fed actually just go on for another month or two before deciding if they should be increasing the pace of tapering. All right, so that is if the inflation figure were to fall short by quite a bit. All right, if the inflation data would come out as expected or even higher, then no doubt, okay, chances are we will be seeing a strengthening of the US dollar, okay, because the expectation of a speed up tapering will be higher. Hence, an earlier timeline for hiking interest rate will also be earlier, okay. And with this, we can expect people to, market participants to actually flow into this whole, bonds and cash much more, okay, much quicker than if they were to, buy in the equities market, okay, which is why we'll be seeing a strengthening of the US dollar if the inflation data were to be stronger, at least as strong as expected, okay. Also keep in mind, all right, if let's say the data were to fall short, there's another factor that comes into play, all right, the Omicron variant, all right, because this whole Omicron variant actually presents an upside risk to inflation. As of now, okay, the COVID situation has really caused tons of supply disruptions around the world. Okay, and because of that, logistics areas got impacted negatively, heavily, and things like that. Prices rise, right? Prices rise as a result. Now, Omicron may actually throw a curveball at this whole inflation data as well. Okay, because if this Omicron issue were to be worse than the Delta variant, okay, that will likely have a sustained impact on the supply chain disruption. Okay, and so whoever actually expects this whole supply chain disruption to be ending in early 2022 can now expect the end of this supply disruption to be extended, okay, to be maybe like, I don't know, second half of 2022 or maybe towards the end of 2022, okay, due to new uncertainty, all right, the Omicron variant. So the thing is, yeah, if let's say we get a data, okay, later on that falls short of the expectation of 6.7 or 6.8, it may not actually have too much of an impact. Why is that the case? Okay, remember that the data that's going to be released only factors in whatever's been happened up to the end of November. Okay, and the Omicron variant actually comes in early December. All right, so if let's say the data is good, okay, if let's say the data is bad for the month of November, all right, we can actually, okay, bad in this case means lower than expected, okay, because we know in general inflation is bad for for us, right? Because things get more expensive and we have to spend more money. But when I say bad in this case, in this context, it means below expected when it comes to the result, okay? Lower than expected data, right? So if the data turns out to be lower than expected, it just means that up to the month of November, it is that figure, okay? And for the month of December, which the data will be released in January 2022, okay, we can expect inflation to rise higher, right? Because of the whole Omicron variant, all right? The start of this whole Omicron disruptions and things like that. So chances are, okay, we are going to see a strengthening in the US dollar later on when the inflation data will be released, okay? And if it's bad, then if the data is bad, then I personally wouldn't sell US dollar. All right, so if you guys are looking for trading opportunities, just pay attention to 2130 GMT +8 because I believe there will be tons of trading opportunities. Okay, yeah, so if let's say inflation pressure were to persist, we're going to see, if let's say we were to see higher inflation, then very likely that the Federal Reserve will be speeding up QE tapering. Okay, so with that, let me see if there's any questions on inflation. Looking sharp because I just got a new webcam, thanks to Junwei, who is not here today. I don't know why. Anyway, no questions. Okay. Yeah, if you guys have any question, just put it in the EcoFin platform because I received a couple recently, okay, on fundamentals and things like that. Yeah, just feel free to put your questions there and I'll just answer you guys as soon as possible. All right, and if no other questions, then yeah, I wish you guys all the best in your trading later on. There'll be tons of trading opportunities coming up. Okay, now back to you, Scott.
All right, thanks, Gimme, for that. And we'll just get into the US dollar index now as well. So like Gim just mentioned as well, and it was an interesting session in the lead up, obviously, to this inflation news. We did see the US dollar, start ticking a little bit higher. It did recently, a couple of days ago, dip below 96.00, which is, seeing some buying interest around that area. And we did sort of propel ourselves back to, around 96.30 was the high. Now, we have started to ease back down a little bit, which, is typical just to see a move high like that, a small pullback. And we've seen support around this, almost you'd call it sort of 96.10 to 96 flat support zone. And just something I do want to share as well was just something that I saw last night, just with the initial jobless claims that were quite interesting in regards to the low number that was recorded. But, in regards to inflation, I think we've definitely mentioned this before, everyone, that you've just got to be a little bit wary of what's coming up. And just something I do want to go into now as well, before I get into the initial jobless claims figures that came out yesterday, and the significance of that, I do have something I want to share, and that is we've got the VIX for the S&P 500. So what this tracks is just the volatility of the S&P 500 in the US. And we did see a little lift here already. So what was noticeable was that the equity markets did start cooling down into the later stages of the session last night. And people are definitely, taking the safe route. And like what Gim mentioned as well, with after that news release for inflation, see how things settle and then go from there. But it does look like things are starting to heat up a little bit. Typically what we see is if this VIX is elevated like we've seen previously, that's where we see that inflow into the safe haven currencies. And obviously the US dollar's been in favor recently, and something to really pay attention to. Now with the US jobless claims, this is a 50-year low as well. So we're at 184K was the figure. Something that was mentioned as well, I pulled this off Forex Trading Asia as well, that was shared. What is being seen is that even though we've seen the Omicron variant, it is anticipated that it's only going to be a moderate negative impact on the economy as well. And that was mentioned by the lead economist of Oxford Economics. But, in the LCMS Traders Club, we did see, Gimme did share a post from Bloomberg about the fact that there are still some concerns. So what that just means when there's all that uncertainty is that you've just frankly got to, be wary of that and have a short-term focus. And we've said that several times. So please be wary of that and make sure you do have a plan before just jumping in, because things can really flip-flop quite quickly as well. But for the US dollar, with that inflation, very likely it's going to come in line with expectations, and that's a big figure. So that's very, very plausible that the US dollar is going to see some strength as well. So that is my thoughts on the US dollar. Now we do have the CAD to discuss now with Jin, and then finally I'll finish up with crypto after that. So we've got the CAD now with Jin. So over to you now, Jin.
Thanks for that, Scott. I see how Kim Hong has been, you and Kim Hong have been talking about inflation numbers. We're looking at very, very high rate. We're looking at possibly, historical highs, and it seems like we're all expecting that big number. So what I'm likely to be thinking about is this probably a bit priced in, right? So I told Kim Hong, stay on. I'm going to try and stay away from the sunlight. But what do you think? Would this be a bit of a priced in situation? Because that's one scenario that's coming to mind. Is this priced in? Because over this week, we've seen that despite I've been saying that we're likely to see that dollar strength come back into play later in the week, as in today, I'm still considering that scenario. Could we be looking at a priced in scenario, and could we be looking at continual dollar weakness? I'll put it back to you, Gimon. What do you think?
Personally, I think it's unlikely that it's priced in. Okay, even if it is, there's not too much of a worry, okay, because what's not being priced in is the Omicron variant. All right, so when the Omicron variant hits, chances are we can expect inflation to be higher than expected, okay, but as of now we still don't really know how big of an impact, okay, the Omicron variant can have on the global economy. All right, so when it comes to inflation figures and things like that, it's always reported 1 month later, okay, for the previous month, right? So it's more like the case whereby for the month of November, okay, the data released for the month of November is it's likely going to strengthen the US dollar due to an expected increase in inflation, okay, but it may not actually be too crucial at the moment, because right now we are more concerned about with this whole Omicron variant, will it actually be way higher when the data for the month of December to be released in January? Okay, so yeah, personally, I feel that it's not priced in as of now.
What do you think, Scotty? He's not. He's recording. He's typing up the summaries. Do you think it's going to be priced in?
Well, I think if it does come in as expected, it could be a little bit of a fake out opportunity. And I think the downside's probably a little limited with, but yeah, that could be a situation where everyone just sort of takes that simple trade and it's just a quick little move higher, and then we could break below 96. So that's why I would be very cautious about, the market digesting things, and it sometimes takes a little while. So yes, I agree. Definitely a lot of volatility around that.
Great. So I like the word fake out there, because what I'm going to highlight to you guys is, as Kim Hong was sharing with you already, the likelihood of the CPI numbers. We're looking at that 0.9 previously. We're looking at a very high rate for a year-on-year number for the US. But if you look at the charts here, just scrolling quickly through the charts, this is the US dollar index on the H4 time frame. It looks like we're going to test a bit lower from that 96. So like Scott was just sharing, I think that we might see a bit of a fake out before the news or during the news. So we might see, I feel like we might see that push to some dollar weakness early into the news and then possibly back up again. So I think what might happen here is a bit of that move. From now to the news and maybe slightly after the news, we might see that happen before ideally that push back up again. So be very careful with that. Why I think that might happen, not just the dollar index on the H4 time frame. I'm also looking at it on a daily time frame, where we're looking and seeing that consolidation at 96. And based on the price action with the MACD's crossovers and how the way the prices have been moving, I anticipate that bounce off this 96. But before that, a bit more downside. Scrolling quickly through all the other pairs, I know the focus is on CAD today, but you can see Aussie dollar has been pushing higher. It needs to break that 7120 support before that with that dollar strength. New Zealand dollar has been pushing higher, probably going to be resisted by 68.19. Euro dollar has tried to come down. You can see that based on our analysis, it's moved somewhat to that target, but it came very close to that 1.1254. Looks like a slight bounce right now. So just based on these three charts, early indication is that we might see some dollar weakness still in play. That's why I think in the early stages, we might see some dollar weakness before we see that dollar strength really come through, being applied across the board. Euro, pound, we're talking about it testing that 85.90 level before turning down. Looks like it's happening. If you miss that move, I think that we can still see it push lower, but be very careful there. Pound dollar, we had good signals on a pound dollar testing lower now, again bouncing back above that 132.22 level. Hence, considering that dollar, a bit of that dollar weakness. US yen still sitting at 113.51 level. We're still looking for that direction. Euro yen moved as we expected, moving down towards that 128 level, as we talked about yesterday. And pound yen still sitting in somewhat of that consolidation, testing that support as we anticipated. So what I'm looking at across the board, across all the currency pairs, is we're seeing still the indication or the price action of some dollar weakness being applied. I think that we should be really careful with the inflationary or the CPI numbers. If it does come out strong, if it does come out as forecasted, as a good number, I don't think we will see the immediate dollar strength. I think we might see a bit of a delayed impact on that dollar strength. And that's why with the US CAD, what I'm anticipating here, US CAD on the H4 time frame, I like how it's reacting to this 127.47 level. You can see that if I had this line just drawn right across, that's the zone that it's reacting to. And first move, what I'm looking for is whether we can test that 60 pip take profit level. I wouldn't go for a 60 pip. I'll keep it very tight, about a 30 pip stop loss for a 60 pip, 70 pip take profit towards the downside for it to test lower on the US CAD. And with a strong CPI number, with a good CPI number being released from the US, that dollar strength also to push it back up into that resistance again. So I'm looking for that two directional move. First, that test downwards, 30 pip stop loss, 60 pip take profit level is still moving as I'm talking right now towards that 126.18 level. And then from that point, bouncing off, you can get in early at about 126.34, tight 20 pip stop loss for a good 90 pip take profit level towards that upside. Two directions on the US CAD H4 time frame. This would be trades that you want to manage a little bit closely, especially leading up to the news release at 2300 hours GMT plus 8, and also after that point, 21:30 hours GMT plus 8, 9:30 Singapore time. And then after that point, you can see that move towards, possibly towards the upside. Bear in mind, we are towards the end of the year. We are at the end of the week. So that move, that volatility might be a little bit slower, might be a little bit less than expected, but I think that direction will still come around. Probably not the best idea to hold any trades over the weekend, especially with all the uncertainty with the Omicron virus variants. With that, things to consider. Keep your trades a bit more short term, short to medium term, but a lot more managed. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jin. And just to finish up here, guys, we've got crypto in focus. So a couple things to talk about. We've got Bitcoin to start with, and I'll just bring that up now. And we did see a little bit, if anyone does follow cryptocurrency, we've seen an interesting scenario where, and okay, so it has bounced a little bit. So I'll just zoom in here now. Let's go intraday for the 1 hour chart. So I've just got this up now. I've got 47, you could even call this 47,000 flat USD per Bitcoin. And we have seen a small bounce. But what I would say is that the thoughts that are mentioned here are more for long-term adds into your position. So I'm not saying any short-term things here. If you are doing that, that just requires a little bit more, frankly, you've just got to have systems in place that take advantage of things. So you've just got to have the ability to deal with a lot of volatility, and also the spread widens a lot as well with cryptocurrency. So it would really, unless you're in a proprietary prop firm with an arrangement with a broker, and that only comes with you doing millions of dollars worth of turnover a month. So I would say probably not. I mean, if you wanted, that's fine, but that would be my thought there, is that you've got to consider who you're actually competing against. And a lot of algorithms trade cryptocurrency as well. So you're playing with that area as well. But really, I want to see some more downside. So with that inflation, I mean, ideally, if it beats, then we're going to see a significant risk-off sentiment shift as well. So that's something to focus on. But like Jin mentioned, we could just see a little while for markets to digest what's come out. Because recently we've seen a bit of a mixed news release for these big events where it's sort of hard to actually ascertain what is sort of going to happen once the release is done. It's not like straightforward. So be cautious. And I'm not, I'm not looking to add here. I really wanted to get sort of below, even down to the lower 40s, which is, a bearish sentiment, but that's my thought there on Bitcoin for an entry. So that's really it. So there's nothing immediate, honestly, unless something happens like this with a wick. But even so, that's difficult to get executed on a trade. So I would wait, maybe even for the daily candle to close, which is conservative, but those are my thoughts. And Ethereum, very resilient, over 4,000 USD per Ethereum. And again, it's just going to be interesting to see how it does hold up once the news is out. So again, wait for that daily candle to close, and we'll see. I mean, if it does survive and it does hold up okay, maybe it is just over 4,000 for a while. So potential entry there. But again, I'll want to wait to see how the daily candle closes as well on both Bitcoin and Ethereum as well. So those are my thoughts there on crypto. Again, not into the altcoins. That's really something you've sort of really got to be well in tune with. And again, it's very volatile and high risk as well. But if you do that, good luck. But and feel free to share ideas as well within the crypto chat. We've got the trading floor chat, and there's been a lot of activity as well. I hope people maybe had a quiet one last night. There wasn't a lot going on. But again, reminder to everyone watching this on YouTube, visit the Jindal Thai website, get into the LCMS Traders Club 30-day free trial, and hope to see everyone around in the chat tonight. And good luck. And see you next week, guys, for Aussie and Kiwi on Monday. Bye for now, guys.